All back to the chart that you had up on the VIX. This was
Mm,
something we talked on last week's show, and shout out to Neil, AJ, looking brilliant on the VIX trade, and that was
mhm.
basically because we had the thought that the market could pull back, and if that did happen, the VIX buying the VIX contract would be a good way to take advantage of that. Is that a fair assumption?
Yeah, absolutely. So let's remind everybody about this whole VIX thing. So the VIX thing is a measurement of how much demand is for options, right? And so typically investors buy options when they're getting a little bit uncertain. We see that people are hedging out of stocks and into gold and even into crypto, but another thing that investors do, especially big money investors, right, is they will buy options as a hedge against their positions. And so when there's this huge demand for options, the price of options goes up. And that's what the VIX is showing us. So when investors get a little bit fearful about what's going to happen next, they start buying options and they raise the price of options. So again, here's another sign that investors are taking actions to kind of protect their portfolios. Now, we talked about over 3 weeks ago about how we wanted to do this VIX trade. And I've got my VIX trade in place, and I almost thought about it. And I was talking to actually the people who are in our program. I was talking about how we could, in theory, off early, but I don't want to do that. And the reason why I don't want to do that is because the VIX trade is at its max profit. Anything above $17, if the VIX is trading above $17, it means that when I go to expiration, it means that I'm going to be making the max amount I can. So I'm actually holding on, at least as the VIX today is well above that $17 mark. I'm thinking that I want to let this thing, mature a little bit further, because if I give it up early, I'll be leaving money on the table. But yeah, my VIX trade has gone from a small credit of about a penny and a half per option share, about $1.50, to almost looking at about $100. So it's almost paying me 100 to 1.
That's crazy. And is expiration the third Friday? So would that be next week?
Next Friday is what we're looking at. I've actually got a bunch of these positions on. The one that I was showing is one that's expiring today. I was using the weekly options, and so I am at max profit, but I've got a bunch of these that I placed on with different expiration dates every week. Next week is the last tranche in my portfolio, but yeah, I'm over the world, especially since I use this trade and I put about 15 to 20% of my portfolio into this trade, especially when the market is doing this. So I'm like on top of the world. But typically, the reason why you do this SIP is to offset losses in the other 80 to 85% of your portfolio. I haven't seen those yet. All of my other trades are also doing well. So, I'm kind of like over the moon here, and I'm taking defensive measures on the rest of my other portfolio. So I'm getting the gains without actually having the portfolio losses. And so I'm like, I might take the wife out for dinner this weekend.